We're now trying to understand, given what we heard from, what we got from that CPI report yesterday, what we could see on the producer price front today.
I think what we're seeing on the inflation things is things are moderating, which is really what the Fed has been after. We're in the camp that we actually think that inflation can have a two-handle by the end of this year, and that really means that the Fed gets to check that box, which is achieving inflation moderation while not driving us into a recession.
What gives you confidence we'll get to 2%, especially given the rise we're seeing in oil and gas prices?
Yes, you're also, though, seeing a lot of costs moderate. So I think that you are seeing slight rises in things like oil and gas, but we're seeing a moderation of a lot of other parts which have driven, higher than expected inflation, particularly on the housing front, for example. You've seen that owner-occupied rent number being very strong, and it's starting to moderate. So inflation, while it's very easy to kind of point to oil prices and the impact because that's traded daily, we just think that there's really a lot of things that are going to help moderate that number.
Taking a step back, we're awaiting Chinese economic data tomorrow. Before that, we have an ECB policy meeting where there could potentially be a hold. What would you say the word of the day is if you were to summarize where we are in terms of market action?
I like the word even-handed. And the reason I like that is if I look at three things that we're looking at the market, we really see kind of this tempered even-handedness. So let's start with the labor market. We've got, the jobless claims coming out, but we're seeing a really just nice balance between unemployment. We're starting to see job openings come down, which means people can access labor. The housing market, it's been good, and it really just hasn't had a lot of volatility. And then finally, going back to industrials, we've seen a big investment cycle. We're looking at the non-manufacturing construction put in place, and that's been very strong, which means that companies and CEOs are really confident, and they're investing because they see that same type of long-term investment opportunity that we do. So I like these type of markets because markets really thrive, and multiples reflect the fact that things are actually less volatile.
So you like industrials, but your top pick is in the telecom space, I believe.
I know, I love cash flow machines. It's just an addiction of mine as a value investor, and Charter Communications is a cash flow machine. The stock had been weak, particularly in the last year or so, because people were really concerned about leverage. People were concerned about 4.5 turns of leverage, particularly into a rising rate environment. Their debt's fixed. And one of the things we learned during COVID is how important connectivity was. And Charter just provides that connectivity. So when people are working from home, either full-time or part-time, they really need their services. And I just like the cash flow that they generate. I think they have the right capital structure, and they have a service that we need. And
so,
a
nice dividend.
You know what? I am happy to take those type of coupons and take them to the bank. And when we're looking, though, at those dividends, you really need to understand what's supporting them and how stable. And that's one of the things that makes Charter to us just an attractive kind of long-term investment, something you kind of put away and forget about.
As we count down to the Fed meeting next week, how should investors be positioned right now? Is it to buy these more defensive sectors or take a break and wait to see what we get?
I think the Fed for us has been so data dependent, and I think that's the message that came out of Jackson Hole is we're watching the data. And I think that at the moment they've got enough data coming to them that suggests it's okay to take a pause, because we're looking for the pivot that needs to happen at the Fed between them saying, okay, we've fought the inflation battle and we've won. And what we see is that the Fed can check the box in terms of, as we forward look, inflation is under control. And so we then need to see them pivot to make sure that they start supporting, the economy and making sure that we have a soft landing. And a soft landing is not a recession. It's just a tempering of the economy and kind of that nice even-handedness that
Are you
we're talking
expecting a rate cut sometime next year?
I don't think we're going to see a rate cut early in the year. I think as we look throughout the year, if the economy weakens, the Fed may need to cut slightly, but I don't think we're looking for a significant amount of rate cuts. I think we're looking at a small adjustment.